So I took a trade today. It was a long entry. I'm going to talk about it. Here's a freebie. I normally don't give trade breakdowns or full-on breakdowns here on the channel. I make these type videos for the elite members, and if you're interested in joining and becoming an elite channel supporter where you basically support my efforts as a content creator, you can find the link down in the description portion of the video. I'll talk about that a little bit at the end of the video though, but I wanted to share with you today a breakdown on a trade that I took. I could have got stopped out, but I knew what I was looking for, and I want to explain to you that I was aggressive and I took the trade going long. And you have to understand what the market is trying to do. I talk about this in all times, when it surrounding market structure and price action, because those two things, those two elements or concepts of trading are king. They are the most important things when it comes to trading, because you have to master them if you really want to be successful and make money in this business. So let's look at the structure of the market just from last Friday or the past Friday and moving forward, okay? Well, Thursday we had where the market was making higher highs and higher lows. You can see the market's been pushing to the upside last week. That just means, we're having structural breaks to the upside continuously. So you should be looking for long entries, okay? And it continues doing that. Highs, higher lows, highs, higher lows, highs. And then the market pivots. It can do that at any given time. It can change its direction, whether for a short term or a long term period of time. The market's going to do what it wants to do, so you have to understand that, and you have to trade accordingly. But you must understand and be able to master market structure. So the market starts moving lower, making lower lows and lower highs, pushing lower, okay? So we're taking out levels or taking out areas here to the left, breaking structure to the downside, and then it shifts, okay? Takes out this area here above 981, making higher highs and higher lows back to the upside, okay? This is a nice pullback, a strong pullback, just to break structure lower here, as you can see. So we got a structural break, okay? The market can pull back deep like that sometimes, and before, it decides to, okay, I'm finished pulling back. What they're basically doing is pulling the market back, retracing hard to do what? To grab areas of liquidity before they decide to make another push to the downside like it did here, okay? Then the market does what? It starts making higher highs and higher lows, breaking back into this swing right here. You see it? The swing right here. So as it's making higher highs and higher lows back to the upside, it's taking out small areas within this swing, okay? So when I saw that into the overnight session, okay, into today's session as well, where it was making higher highs and higher lows back to the upside here, I said, okay, is it going to continue doing this? Okay, because if I was to draw a channel, where we at? Right here, okay? Just on what took place Friday into the overnight session last night, where it finalized and made its last low here, I would be looking at things as if we're bearish, right? Okay, which we were. But the thing is, it started to change direction after it made this low here and started making structural breaks back to the upside. Higher highs, higher lows, higher highs, higher lows. Okay? When it got here to the high right here, which is an area of resistance, I said to myself, and by the way, guys, this right here, it just projected this area right here. That was a long position on its pullback to this key area of demand right here. I saw it, but I'm recording this video now. You can look down. You guys already know that if you've been following the channel. Look over at your lower time frame chart. Once you have your demand zone marked up, look for the rejection that that I talk about here on the channel quite often in just about every video. So, but I'm gonna cover that in this video today on a trade setup that I took going long. So when I saw the market making higher highs and higher lows back to the upside, I asked myself, okay, is it done? Is it going to want to push back down here and break structure? Because at this moment, it's breaking structure back to the upside. But then it turns and starts doing what? Low, lower, high, low, lower, high, low, lower, high. Okay? And then breaks start taking out areas right here. Now, we have a major low resting here at 920, 921 and 3/4, right? But then it quickly turns back around. When you see the market start to do something like this right here, okay, it made a low, and then it pushes back up, and then it pushes down, breaking structure, and then it pushes back up, breaking structure. Be very careful, because as you can see what it was doing, it was setting itself up into a sideways motion where it's starting to range, right? It didn't push up there to break structure in order to come down here and break this low down here, okay? So we're in between this low here and this high right here, so the market can range in between a leg, okay? But as it was making structural breaks to the upside and turned direction, it made a high, higher low, broke this level here, broke structure to the upside, tapped into this area of supply. When it started doing that, I noticed that we have what? resistance right here, but this is also a supply area, okay? Right here with this zone I marked that. But I also marked a demand area because what did we just do? We just broke structure to the upside, tapping into this area of supply, but we have this area of demand resting down here at the bottom, okay? Now, what I saw was as we were pushing back higher, we were breaking structure, all right? So I'm paying close attention to that as we're moving back higher, a high, higher low, followed with a structure break to the upside, tapping into supply. So if we're tapping into supply and we're breaking structure back to the upside, then it would make sense for me to possibly look for a pullback to an area of demand. Now we're breaking structure back going up, slight area structure break here, okay? All right, pull back to demand to fill in the remaining portion of that imbalance back up to the upside, okay? So it does break off of, or it bounces off of this area of supply back to demand, but I'm looking for rejection at this point to go long, back up and carry it to the upside and possibly test 18,017 and higher. All right, so let's move down now to the lower time frame. Okay, so you see the zone I marked here, which is the same zone off of my higher time frame 60 range chart or higher base chart 60 range chart here. All right, right here, demand. Okay, move down to the lower time frame or lower base chart. This is that same zone right here. Now, when I saw the market breaking structure to the upside off of the higher time frame or higher base chart here, as it did right here around 10, 12, somewhere in that time frame there, and it started. I started noticing structural breaks to the upside on the lower time frame. And after we had broke this area here right above at 18,004 and a quarter, well, I started looking for a breaking structure where there's a creation. Sorry about that. Creation of an area of demand. Okay, so because I talk about in the lower time frame, looking for structural breaks to the upside once the market has tapped into your zone. All right, so in this case here, we were breaking structure to the upside. And I was looking to aggressively get in because I knew that, that more likely it was going to test this area up here. Just noticing that it was breaking structure back to the upside here. So I didn't full on wait for the actual pull back to the demand zone here. And this is why I say that you should wait for the demand zone. And I highly recommend you doing so because first and foremost, when you're taking a trade where the origination of the buying started taking place at, this was demand right here, then it would make sense to take it when it gets back there, right? But sometimes I'll get in on an aggressive trade and, just can't help myself to try to jump in when I see that the market is breaking higher. Now, I'm not chasing the market and just it breaks higher, I'm getting in. No, I'm taking a pullback to a key area of demand off of the lower time frame. So as it was breaking structure to the upside here, making higher highs and higher lows, I was interested in this area here to see if it was going to pull back, get the rejection right at this demand zone off the lower time frame. Once I got the break and close of the candle above, I was going long, right? And that's the trade you saw that I posted over on the Discord community. It was in this area right here, okay, off the rejection of this smaller 12 range chart demand zone, okay? But again, keep in mind, we did break structure, all right, right above here at 18,004, okay? And I was looking for the continuation to push higher to test this area up here. Now, that doesn't mean that the market is just going to jump up there real quick and test that zone. All right, I'm not, or that filling that imbalance resting right here. As you can see, what happened on the lower time frame is that I got in here, it went all the way up to 18,015. Now, the imbalance to fill is back up there at 17, so it's like 2 points away. So look what it did before it finalized and made a decision to go up there. It came out to 18,015, pulled back to the demand zone, and this is why I say wait till you get that pull back to the demand zone, okay, right here on the lower time frame to look for your opportunity to go long. So once it pulls back to the zone, then I like to look for a basically the market is turning or shifting direction, breaking structure back to the upside, pushes up, starts to take out structure right here above 17,998 and a half. And then we get followed up with structural breaks to the upside where it's making higher highs and higher lows. At that point, when I see that, then I'm interested in going long, okay? But when it started breaking structure back to the upside here in the lower time frame, it quickly started folding back down. Made a low, lower high, breaking structure, coming back to the zone, which I would have been interested in right here at 17,995 if it had pulled back to it immediately without basically breaking structure back on its way back down. So that's why I say it's important to follow price action, when you're marking zones and, you're waiting for the market to get back to it, pay close attention what takes place on that area or on that trail back down to that area of demand right here. So then in this case here, I'm just going to wait for it. Again, it taps again for the second time off that demand zone on the higher time. So in this case here, I'm just going to wait for it to basically show me that it wants to possibly push higher. All right, so it pushes up, pulls back, and breaks structure again to the upside. Okay, as it moves higher right here. And then it pulls back. I'm going to blow this up for you. It's a very small area. When it pulled back right here, all right, it wicked out right below here. So you have to understand what they're doing there when they pull back and they're just wicking an area out, and then you get the break and close of a candle, in this area here to go long. That's why I would have probably went long right here at 18,003 or 18,004. When I saw price pushing back up, breaking structure above, pulling back, it came back below this area of support right here, small area of support off the 12 range, and then with that bullish hammer candle close right to the upside, and it wicked out that area, okay, and then followed up with another candle close to the upside. Then you can go long right there around 03, 04 area. All right. Now, if you went long over here and you claim to be this is the area of demand right here, which it is, you got to be careful, because now what you're going to have, if you got into a trade right here at 17,997, you're going to have resistance right above you here and in these areas right here, in which it could possibly reject and push back lower. So that's why I say it's very key to be mindful of what takes place on the zone. So that's pretty much all it is. It's just marking an area of supply or demand in this case here, because we're breaking structure back to the upside. Even though we tapped into supply, we started breaking structure to the upside. All right, and then it comes back to this area of demand. So then I'm looking to take the trade, because there's still an area of imbalance resting right here coming out of the swing. From here, the bottom end of this candle here, right here, this red candle, to the top end of this red candle, there's an area of imbalance resting right there. Okay. So when the market goes up here, it goes up to 15. The imbalance is resting back at 17 and a quarter or 17. Comes back to demand. We get the rejection off the lower time frame, and then I'm looking for the setup, break of structure, creation of a demand zone, small area demand, and then I'm going to go long. Okay, so that's how I do it each and every day. Again, for example, this right here, you see with the market, and then it went up to the upside. You see that, right? It actually pushed higher. It came back to demand, rejected, boom, broke higher, pulled back, broke structure, took out a major high here at 18,051. Okay, and then it pulls back. We got a demand zone here. Now, this is the tested area of demand. I talk about untested, tested areas of supply or demand. And that just basically means if there's a gap of void at the zone, then I mark it as high probability area. If there is a not a gap at the zone, demand and supply, then to me it's low probability. That does not mean that it would not reject that zone. You just got to take more caution and be more precaution. Take more precaution when it gets to that zone if it's low probability. This was low probability. It was tested. Broke right here, broke above this last, this bullish candle broke above this last down bearish candle to the upside. And then this candle here, we get a pullback. The wick of it closes in the gap there. But still, it comes back here. When it does get back here, it still rejects if you go down to your lower time frame. And you got to pay close attention to price action. When it broke structure here, okay, what did it do? It pushed up, pulled back. It broke higher here, slightly, okay? All right. It did turn back around and pushed lower and broke right below here at 18,019. But if you notice this bearish candle here that closed down below that area there, below that level, the next candle came back and it basically tapped into the area of resistance right there. So, if you get full on and clear rejection off the lower time frame, if you look what took place here with price action as it was closing in the gaps to these imbalances, the candles came down, it pushed down, okay? This third candle closed the gap or imbalance back there. Push down again, close of the gap or imbalance back there, and it was tapped in already. It tapped the area of resistance already. So when we get things like that and we see rejection off of the lower time frame at a area of demand right here, then you can look to take the market back up to the next area of imbalance, which that next area of imbalance is going to be up here, right here at 18,044 and a quarter. Once it rejects that demand zone, that's exactly where it went to. And I was talking about that, I think, shortly at the beginning of this video. I didn't take that trade because I was recording this video here. But if I would have saw that and I wasn't recording, then I would have taken that trade if noticing the rejection off the lower time frame. So we can look at that right quick. Let's go down to 102, where it took place at. That's 102 Eastern time. So that was around this area right here. So, if that was the area of demand off of the higher time frame, which I marked right here, let me do this. All right, we'll just do it like this right quick. All right, that's the demand zone. You see it right here? That's that demand zone. All I'm looking for now is where the market is breaking structure to the upside, pushing, making higher highs and higher lows, takes out this area here at 18,017, okay? Pulls back right here. We got an area of demand right here. This is an untested high probability demand zone. Get the break and close above, right above here at 17, or you can wait for the closure there at 19. Go long. Where are we going to aim for? We're going to aim for back up here, the tops up here, to fill in the imbalance at there at 18,044. Look at the 12 range to see what happens here. Once you get that pullback and closes above, okay, look, boom, goes all the way up there and hits 18,044 and pretty much a half, okay, and fills in that imbalance back up to the upside. So this right here would have been your golden opportunity. Let me move this down some so I can draw off the demand zone on the lower time frame or lower base chart here. Mark it in green because that's a demand zone. All right, so we got the higher time frame zone on the 60 range. Boom, tapped into it. Okay, we got the lower time frame creation of the demand zone on the lower time frame or the lower base chart, the 12 range entry chart. Boom, break and close of the candle above, get in at 19, take it up to 44. Simple as that. All right, so I just want to show you how easy it is if you just simply test it, back test it, practice it. Okay, even when you're in demo or simulation, you know, forward test and back test. Okay, you know, when the market's not open, go back and maybe do market replay, or go back and just kind of look back at your charts and see. You got to spend time on the charts to make sure this thing works for you correctly. Again, you don't have to trade like me. I'm not telling anyone to do so, but this is how I make my money each and every day. Profiting is trading supply and demand the way I do, using the strategy that I've devised and put together that works perfectly for me on trading the range charts here, trading futures as well. Okay. But outside of that, that's all I have for you guys today. Hopefully that makes sense. And given those breakdowns, maybe open your mind up a little bit more so you can see things more or better from a different perspective. Try it yourself, okay? But look, if you're not a current subscriber, what are you waiting for? Please take the time to go ahead and click on the sub button down below. Join the team. Also join us over in the Discord community. You can find the link down in the description portion of the video. Click on it, invite yourself in. It's free of charge. If you want to become an elite member and gain access to the trade breakdown videos, right below the Discord link in the description portion of the video, you'll see a link that says Become an Elite Member. Click on it. You'll see 2 tiers pop up. Make sure to choose the one that says Elite Channel Supporter or may say Elite Channel Member. It's $6.99 a month. You get the trade breakdowns plus the video playlist. And that's it, guys. Last but not least, please do me the biggest favor of all and drop a like on the video if you found value in the content. See you in the next one. Take care.